Hutch 700 yesterday, 1,000 today. Are we witnessing the collapse of the U.S. financial system because of a tweet?
Hi, I'm Cheetah from YouTube channel Trump Tariffs, where we analyze the biggest fluctuations of the global economy in the most understandable and engaging way. Today, we will peel back the whole thing: China's 34% tariff, Wall Street's response, and what President Trump doesn't want you to know. The stock market takes another hit as China responds to Trump's tariffs with its own measures. U.S. stocks are experiencing a decline for the second consecutive day. The Dow has already plummeted by 1,000 points, following a staggering decline of nearly 1,700 points just yesterday. This unfolds against the backdrop of President Trump's intensifying trade conflict, even as a surprisingly robust jobs report has just been released this morning. This morning, the markets are also influenced by China's retaliatory actions. Beijing has declared its intention to counter the White House's extensive tariffs by imposing new tariffs of 34% on the United States. We now turn our attention to New York, where Trump Tariffs' business and politics correspondent Vanessa Yurkovich is ready to provide us with the latest updates. Vanessa, you bear witness to it all. Elucidate it for us. To begin with, let's delve into the jobs report that was released this morning. Indeed, the latest jobs report, which surpassed expectations, seems to have tempered the initial opening on Wall Street, albeit slightly. However, take a moment to observe the current state of stocks. This morning, markets are experiencing significant declines as investors brace for what could be the worst-case scenario, an escalation of the trade war. There is a palpable desire for assurance that the administration is open to engaging in negotiations with other nations. It appears that this may not be accurate. Investors express to me that their trust has been utterly diminished as this trade war intensifies. As you pointed out, there is indeed a silver lining. The jobs report revealed numbers for March that exceeded expectations. Employment surged by 228,000. That exceeds 100,000, or is roughly 100,000 above what was anticipated. The unemployment rate has edged up to approximately 4.2%. A modest increase from the previous 4.1%. However, as investors have been conveying to me, this information has become quite dated at this juncture. This reflects on the past in March. Everything truly shifted on April 2nd, when President Trump unveiled the universal tariffs. Anticipation hung in the air on Wall Street as it braced for a response from significant trading partners. This morning, we received news from China regarding a 34% tariff imposed on all U.S. exports entering the country. Annually, this amounts to a staggering $143 billion in goods. Items such as chemicals, computers, and agricultural products, which I should point out already faced tariffs imposed in 2018 during President Trump's initial term, along with retaliatory tariffs that were enacted in March. Thus, an escalation in that regard is evident, and it will undoubtedly affect transportation as well as the oil and gas sectors emerging from the United States. It is important to highlight that the United States receives significantly more from China than it exports to them. Each year, we receive an impressive $438 billion in goods. As a result of the measures implemented by President Trump, there now exists a 34% tariff on those goods. Economists concur, Wolf, that those prices, those escalations in costs, will probably be transferred to us, the consumers in the U.S. As we gear up to discuss the current state of the markets, Donald Trump has taken to social media to criticize China, asserting that they mismanaged the situation and, in his words, panicked in reaction to his tariffs. However, It is clear that the global stock markets have plummeted following the announcement from China just a few hours ago. The recent communication from the President of the United States clearly illustrates the significant presence of ego at play. One might ponder the extent to which TIFATAC truly reaches. As we survey the landscape of global markets, it's time for a thoughtful examination. The Dow Jones has experienced a decline, plummeting by approximately 1,100 points thus far today. Yesterday, it experienced a decline of 1,600. Currently, we are witnessing significant declines in stocks such as Apple, Qualcomm, Tesla, Caterpillar, and Nvidia. These companies have significant exposure to China. It appears that significant distress is beginning to manifest for major American corporations. Undoubtedly, this will influence the portfolios of a diverse array of investors and consumers, including the everyday individual in the United States. Thus, we find the presence of pain in that space. We are experiencing significant losses in Europe as well. No response from Europe has emerged thus far. Anticipation looms as we await a wave of retaliation from other nations in the coming week, once the dust settles on the current events. However, it's worth noting that we observed Zetrodax dipping approximately 4% prior to its broadcast. The FTSE 100 hovers around comparable levels, much like the CAC. That comes on the heels of significant losses in Asia. Once again, we find ourselves facing a day marked by profoundly steep losses throughout the market. In moments such as these, it seems that many are pondering the criteria that define a stock market crash. Are we making any progress toward that goal? A discussion unfolded among my team and me. When does it become a leap into the unknown? At what point does it become a tank? At what point does it become a crash? You'll be pleased to hear that we are still far from a crash. We have been cautiously approaching a downturn in certain markets, such as the Zetrodax and the FTSE MIB in Italy, which has declined by over 5%. We have yet to reach a point of collapse. However, one must take into account the losses we've endured. Not merely those of today and yesterday, but those accumulated over recent weeks and months. The pervasive uncertainty and the looming threats of tariffs have compounded, resulting in a significant toll. We are speaking of billions of dollars evaporating from the stock markets. Today, I received a note from Deutsche Bank indicating that the market is responding in a singular manner. It is pricing in a global recession. If the current trajectory persists and we witness further acts of retaliation, that is the direction in which we are inevitably moving. Is there a way to circumvent that at this juncture? Has the decay begun to take hold? Is there anything that might turn the markets in that direction at this juncture? The current state of negotiation reveals the U.S. President's retreat at this juncture. Thank you, Anna. I appreciate it. Indeed, we are joined by a panel of economists ready to delve into this matter. Joining us from the bustling streets of New York is Trump Tariffs analyst Rana Foroohar, while esteemed economics professor Ha-Joon Chang connects from the vibrant city of London. It's a pleasure to see you both. Rana, let's turn our attention to you first, as we were discussing Donald Trump's presence on social media earlier. He has also brought up a few other matters that I wish to address. He has repeatedly asserted that his policies will remain unchanged, proclaiming that this is an unparalleled opportunity to amass wealth richer than ever before. How do you interpret those remarks amidst this tumultuous time? There are two perspectives to consider in this situation. The initial approach, and the more daunting one, to be honest, is that he's merely firing off the cuff. A coherent global strategy appears to be notably absent in this context. This is Donald Trump, a figure defined by his formidable ego as we have just discussed. I believe one could compellingly argue that point. He lacks, you see, the opportunity for re-election, provided there isn't a coup in the U.S. He might find himself less preoccupied with global markets this time and the U.S. stock markets than he was previously. It could revolve around dominance and self-importance. In the other scenario, which leans more towards a strategic approach, he genuinely believes, and I know many on his team share this sentiment, that the global trading system has been in need of a significant overhaul for quite a while now. He aims to align the overall tariff rates imposed by the U.S. on other countries with those that are imposed on us, bringing them closer together. Naturally, everything has been upended as we find ourselves engulfed in a full-blown trade war. I have my doubts about the longevity of these numbers. I believe there will be some negotiation taking place, and in fact, it seems that such discussions are already occurring behind the scenes. What I can assert is that I believe the likelihood of a recession has significantly increased, largely due to the complete erosion of trust. I believe we find ourselves in uncharted waters. This represents the most significant transformation to the global economic landscape that we have witnessed in the last 50 years. Indeed, on that note, Hajun, regarding the point Rana mentioned, even if the markets experience a slight recovery, we are witnessing these efforts to negotiate. To what extent has the damage inflicted on economies worldwide become irreparable at this juncture? Indeed, in recent days I've been pondering the possibility of finding a method within the chaos. I have come to the realization that the method is rooted in wishful thinking. The reality is that Mr. Trump believes that by erecting a tariff wall, foreign companies will, in the first instance, be inclined to invest. It is unlikely that any substantial efforts will be made in that direction, as the U.S. industrial base has been systematically diminished over the past 40 years, and it cannot be restored in just a matter of years. Furthermore, should they arrive in significant numbers, there will be no tariff imposed. Thus, he cannot possess his cake and consume it as well. American companies are unlikely to make significant investments as the American financial system has evolved over the past few decades into a parasitic entity, functioning primarily to extract profits from corporations. Over the past quarter century, a staggering 90 to 95% of corporate profits have flowed into the hands of shareholders, manifesting as disproportionately high dividends and stock buybacks. American companies find themselves lacking the funds necessary for investment. Unless he addresses the financial system, the additional profits accrued by American companies through tariffs will merely seep out of the system. It seems that everything hinges on mere wishful thinking. In recent days, it has become evident that the United States is, in essence, relinquishing its commitment to the principles of the rule of law. My native country, South Korea, entered into a free trade agreement with the United States approximately 15 to 20 years ago. Now, we find ourselves facing a 25% tariff. Who will now regard American commitments with the seriousness they deserve? Indeed, what we are witnessing is, in numerous respects, a profound realignment of the global order unfolding before us, Rana. It was intriguing to witness China's Vice Commerce Minister express a desire to collaborate with the EU in opposing protectionism and unilateral bullying. What is the extent of the shifts we can anticipate in the global landscape of trading blocs? Imposing. It promises to be monumental. This truly presents a remarkable opportunity for China. In many respects, the ball is now in China's court, and the stakes are theirs to navigate. It will be quite fascinating to observe the strategies employed by Xi Jinping and the maneuvers of Beijing in this context. I find myself somewhat doubtful regarding the prospect of a fully fledged alliance between China and Europe. The current scenario suggests that a significant influx of affordable Chinese products will soon inundate the European market as their access to the U.S. has been curtailed. Will the Europeans find that appealing? Indeed, they are not. This is the moment when one begins to grasp the unfolding reality of a true global trade war. Imagine a scenario where the Chinese government decides to openly admit, "We recognize that we have been flooding the global market with inexpensive steel, affordable electric vehicles, and low-cost solar panels. And behold, Europe, we are poised to forge a new and more fruitful paradigm with you." Indeed, that would capture one's curiosity quite effectively. In that regard, one might argue that Donald Trump has contributed to a resurgence of greatness in Europe.